time seeking a car loan, you may be shocked to learn that you have bad credit. If you've never financed anything before, or not even applied for a credit card, how can this possibly happen? Since 15% of your credit scores are calculated from your history of using credit, this can drop you into the subprime lending category. Additionally, having several credit accounts and a number of different credit lines each make up 10% of the information that produces your credit scores. Being new to the world of credit means you will start off with a certain number of rejections and higher interest rates when you're approved. As a first-time car buyer, finding out that you have bad credit is par for the course in applying for car loans. For your first car loan experience, it's best that you equip yourself with some important knowledge before you start wandering through your local car dealerships. First, although you may be aware of the fact that you have bad credit, you should order your credit scores. This costs a small amount of money, but it's well worth it in order to know exactly where you stand. Your best source for credit scores are the credit reporting companies Experian, TransUnion, and Equifax. These companies are relied upon most often by banks and lenders to get an accurate fix on your credit-worthiness. If you know your numbers, you can do those things necessary to improve your credit. The good news about your newness to the world of credit is that your situation is very temporary. All first-time car buyers experience this initial hurdle in getting a car loan, and it's an easy obstacle to overcome. Most lenders attach high interest rates to the loans for people with less than perfect credit, so don't feel insulted when it happens to you. It's just the cost of doing business. Once you pass the fact that you'll experience higher interest rates, it's up to you to shop around for a lender that offers the lowest interest rate for someone in your position. Start with your bank. If you earn a steady income and live on your own, you have a bank account or an account with a credit union. This means you have an existing relationship with the lender. If you hold an account with a national bank, you have access to their loan programs, which are not tailored to the individual, but they have the strength of the bank's national level of risk assumption. This doesn't mean that they will offer loans at discount prices, but they are more likely to approve your first-time car loan since they have direct access to your finances, further secured by the car you're planning to buy. First-time borrower car loans through a credit union are a bit different. As an account holder with a credit union, you're a member of a customer-run organization. Car loans are handled on a personally tailored level. If your income and accounts clearly indicate you can handle the obligations of a car loan, you'll be approved. Interest rates tend to be lower since credit unions operate as a nonprofit business. Therefore, your interest rates won't be used to drive profits for a national company. Credit unions tend to be local operations and may suffer their only disadvantages in the fact that they are small business. But they can also work to your advantage in that your credit union will more likely have intimate knowledge of your ability to pay a loan back in a timely manner. Car loan specialists are a very different sort of operation, but the chances of getting approved for a first-time buyer car loan are as good as with any bank, maybe better. There are about a dozen or so nationwide car loan specialists that operate in direct competition to banks, as well as car dealerships. This means that they must provide car loan agreements that are more attractive to borrowers than those banks and car dealerships can offer, which usually means lower interest rates across the board. Though services are less personal, approval chances for first-time car buyers can be good since many of their loan programs target people with less than perfect credit. This includes you. Car dealerships offer financing with fairly loose standards for credit. This is because a loan you make through them is actually farmed out to one of several banks that do business with the dealership. For first-time buyers, car loans through a dealership are very easy to get, but comes with several caveats, and the dealership's finance managers will trade heavily on your inexperience. Knowing that you're going to finance your first car purchase with the dealership should put you on your toes. When you've settled on a loan agreement, make sure that it is actually finalized. In some cases, you can have possession of your new car in several days from when you receive a call from the dealer saying that your loan application was rejected, but you qualify for another one, at almost twice the interest rate you were first quoted. And that's the key. Know the difference between a loan quote and a loan agreement before the salesperson lets you drive away. Buying a car loan for the first time is a dizzying experience. The important thing is not to let the people trying to sell you stuff give you your education. Instead, find out on your own how the process will work before you begin negotiating a car loan. Do some research on the cars you think you'd like to buy, then shop around for the lender with the lowest interest rates available. from your bank to the car loan company to the dealership. Your first time buying a car doesn't mean you have to do it without some handy information. Read up on the whole process and then start your car loan adventure as a first-time car buyer. Federal Auto Loan. Good credit, bad credit, no credit, all good.